Hey everyone, welcome back to Cashflow Confidence. I'm Shelby Ashley, and I help business owners feel more confident about their cash flow.
Hey everyone, welcome back to Cashflow Confidence. If you're listening to this on audio, I do want to remind you that I am on YouTube now, so make sure you go and check that out. In this episode, I want to talk about why it seems that revenue can be so far up, but your cash flow is still so down. That happens all the time, and there's several reasons why. It seems like you've been working way harder and your team's been working harder. You've brought in all this revenue, but the bank account is not showing it. So let's dive into why that might be. The first place I look when I hear someone complain that, they've sent out so many more invoices, they've done all this new work, but their bank account still just dwindles. The first place I'm going to look is the gross margin, because if your revenue is up and your gross profit as a percentage of that revenue is also going up, that's an issue, because your gross profit as a percentage should stay steady as revenue grows up. And so if it's also going up, then that could tell me that, there might be an issue with one of your suppliers. You're eating up a bunch of costs that you shouldn't be. In fact, I had a client one time who, this was his case, like his gross profit percentage was going way up with his revenue. And after taking a look and pointing it out to him, we realized that one of his main suppliers had like quality control issues that was costing them a lot of money, and they were passing those costs on to their customers. And so I showed this to him, being one of their customers, and he was like, well, that's not going to fly. And so I told him, it's time to find a new supplier. So if your gross profit percentage as a percentage of revenue is going way up and revenue is only going up a little bit, that might be something to look into. The next place I'm going to look besides gross profit is your net profit. And so let's say, your revenue is going way up, your gross profit percentage is also going up along with it. Let's take a look at your net profit, because I've seen a lot of times where revenue is up a whole lot compared to prior year, but net profit either stays the same or it could be down a little bit. If that's the case, then I'm going to look at your advertising expenses, I'm going to look at your payroll expenses, and I'm going to look at your overhead expenses. Because it could be the case where, you've taken on a bunch of new work and you've also had to hire a bigger team in order to carry out that work. In that case, in the short term, yes, your net profit's going to take a hit, but you're making a long-term investment that you're going to recoup from. And so I'm okay in cases like that with your net profit going down a little bit because you're making investments. However, if your revenue is up, your net profit is down, your team hadn't changed, I'm going to find where there might be something leaking out of your business, because you need to think of your business like a bucket. If there's a hole in that bucket, it doesn't matter how much water you keep pouring into it, it's going to leak out everywhere. So my job is to find whatever holes exist in your business and plug them up so that when you start to, make more money and bring more revenue into the business, it doesn't leak out everywhere. The next place I'm going to look is your balance sheet, because you could be very, very profitable and not be keeping any of those profits. Like, those profits may not see your bank account. The first place on your balance sheet I'm going to look at, if your net profit is way up, but you're just saying there's no cash anywhere, is your accounts receivable balance. So you've sent out all these invoices, but they don't matter if your customers aren't paying them. So if you've invoiced a whole lot, your revenue is going to look way great, but if your customers aren't paying, your bank account's never going to see it. So you're going to be paying taxes on these sales, you're not going to have the cash to pay it. Nobody wants to do that. Okay, so accounts receivable is the first place I'm going to look, because if I see that climbing up, then it's time to get on the phone and start collecting on those outstanding invoices. The next place besides accounts receivable is any large debt repayments. So if you are making really high debt payments, those are not going to show up on your profit and loss, the principal portion anyway. They're only going to show up on your balance sheet. So you could be at 20% net profit, but all of those profits you could be paying back in debt repayments, and so your bank account's never going to see it. If that is the case, then what you need to do in that point is just do some debt restructuring, see how you can work that into different kind of loans or a line of credit to lower that monthly payment and hang on to more of your profits. The final place on the balance sheet that I'm going to look besides accounts receivable and outstanding debt is your owner draws. So anytime you're swiping that company credit card or debit card, that's taking a hit against your company's bank account balance. So again, it doesn't matter how profitable you are if you're spending all that money on personal things, and it could be well, I'm at the gas station and I left my wallet at home, but I got this company card right here, and so I'm just going to use it real quick. Things like that add up over time very quickly, faster than you might realize. And you're not going to remember all those times that you used the company credit card when you couldn't find your wallet or whatever the case is. Things like that add up, and so they will eat into your profits very, very, very quickly. So there's a few other, I think, more specific places on your balance sheet where cash could be tied up depending on what kind of business you have. Like if you're retail heavy, obviously your cash could be very, very tied up in inventory. So that's another place you want to look. If you do keep inventory on hand, get it off the shelf, because the more inventory you buy, if it has to sit there, that's eating up your cash. And so if you're noticing that your revenue is increasing, you've had a lot more work come in, your team is a lot more busy, and yet your bank account is dwindling, check your gross profit, check your net profit, check your accounts receivable, and call on those outstanding invoices. Keep your debt payments pretty low compared to, the money that you are bringing in, and make sure that you're not using all of those profits for personal expenses. And as always, if you feel like your bank account is going down, but you do have a lot more income coming in and you just cannot find it, please reach out to me. My contact information is always in the show notes. But until then, see you next week.